So you heard me speak about this 2.5 billion people. And so I'm going to speak about the consumer. So we look at the future around the customers and the consumers who are moving away from traditional cash-based societies into the global digital world. That global digital world that they're accessing through their devices, which are in their hand, their mobiles, is opening up a whole lot of areas to them. It's opening up information, it's opening up connectivity, but what we're really excited about and what we're focused on is it's opening up commerce. And it's opening up commerce at the micro level to a whole bunch of people who, if you look at the pyramid, were considered kind of below what traditional financial institutions were interested in. Because I worked for a long time at a financial institution, at Citibank, and we were really looking at the top of the pyramid. Truly, even in the emerging markets that we were working in, we were interested in people who had bank accounts, we were interested in people who had jobs, we were interested in people who had savings accounts, and we were interested in people who wanted to borrow money for houses or cars or personal expenditures. And everyone else, we just didn't pay a lot of attention to, and our competitors didn't pay a lot of attention to. And they weren't considered bankable, right? We had this concept, there was bankable and there was non-bankable, and the non-bankable people eventually would become bankable, and then we would start talking to them. That's all changed in the last couple of years. And it's not only changed because the big foundations like the Gates Foundations and the big NGOs and the World Bank have said this is an addressable population, but it's changed because as these people have come online, their swarm power has become obvious to the ecosystem. And so we say that we believe over the next kind of 5 to 7, you could say 10 years, there's about 2 billion people who have been traditionally at that bottom of the pyramid who are online through their mobiles, but are going to be coming online as mobile devices. Right now are information and communication devices, potentially education devices, but they're commerce devices. We look at these devices, and every device is a commerce device. And so the swarm power of those people are going to be addressed. And they're going to be addressed by the networks, they're going to be addressed by the brands. And I was saying earlier, this is very unpopular to say, but people love to use the story in Kenya, M-Pesa. And the reason they love this story is because nobody paid attention to that population in a commercial way before Vodafone and the regulators and the banks decided to create that ecosystem. So even though M-Pesa has not been transferable even in the neighboring countries over the last 10 years, what it did is it broke through a mindset that these people are important. They're commercially important. And if those, farmers in Kenya individually were not being paid attention to, the swarm power of them has created a very significant business opportunity. We look at them as, there's the commerce piece of it, which is all of their commerce, whether it's buying seed, buying a goat, buying food. That commerce area is the area where I think is the least understood. How much are these people, because a lot of it is barter still. So there's barter and there's cash. Where we have a clear, I think, view, or a clearer view, is in the remittances and personal payment space. And that's why we're having so much focus on personal payments. International personal payments, as you know, one of the big initiatives we're working on right now is with our strategic partner, Western Union, because those corridors are very very established. But that's international remittances, and that's formal international remittances, which you could argue is a very small slice of what's actually happening on the domestic scale. So the money that is being transferred inside of India, the money that's being transferred informally across the borders, in South Africa to the 14 border states, is quite significant, to the point the governments have actually asked us, can you help us formalize this? Because informal money operators create a whole bunch of problems for governments. They create a whole bunch of problems. They have serious crime along the border of taxis with trunkfuls of money who are transferring money across for these people. So money services and financial services is happening at the bottom of that pyramid. It just hasn't been formalized yet. So it's tens and tens of billions. How much it is, I think, will become a lot more clear over the next 3 to 4 years.
Yeah. So good morning, everybody. Very nice to meet you. So Monetise, obviously not as well known a name as Mastercard, so probably not clear exactly what we do. So we're a mobile money enabler. So mobile money for us means enabling people to manage their accounts, make payments and buy things on their mobile phones. And we're an enabler of that. So we help banks, we help telcos, we help payment companies, we help retailers do that successfully. So we run the technology that lets them basically outsource the complexity of dealing with the mobile world. And we also help enable the ecosystem to connect together all the different players in this so that you don't end up with a whole series of point solutions. That's roughly what we do. And we're a 700 strong company based in the UK, operating globally, and we're sort of the biggest player in this space globally. And the key theme for all this, I'd like to start with the question that the gentleman in the red jacket, the point was made earlier. The reason that the mobile phone is becoming so important for money is because it can enable people to do things that they need to do in a better way than their existing alternatives. So we all need to manage the money we have, make payments and buy things, and we all have a range of choices about how we do that. And it's different choices in different parts of the world, and depending on who you are. But if I'm out shopping in Canary Wharf here, and I want to know if I've got enough money to buy something, I could go home and log on to internet banking, but that's not much of a choice. I could go and queue up at an ATM, that's not much of a choice. Actually, the ability to click out a simple balance inquiry from my mobile phone as I'm walking along, chatting to my friends, without even breaking my stride, that's brilliant. And that's why the humble balance inquiry in the developed world is truly a killer app on the mobile phone. You go to another market, so M-Pesa and Kenya or something, the fact that that service can enable somebody to send money home to their family who may live hours and hours or even days travel away, rather than them having to take the physical cash themselves, they can send it with a simple click of a basic mobile phone. That again is absolutely meeting the 10 times better criteria that you have to get if you're going to get consumers to change their behaviour. But just because something's on a mobile phone doesn't necessarily mean it's going to be better, and that I think is one of the big confusions in this space. There's all sorts of fabulous technology which is almost as good as the alternatives available to consumers. Well, that's going to get pretty much zero adoption outside the early adopters, isn't it? Because, you know, if I'm buying a can of Coke in a supermarket, going in and scanning the barcode, flipping through some credentials, approaching the point of sale, holding the phone at just the right angle, well, that's rubbish compared with using a card, God forbid, compared with even using cash. So it's really important. There's a great danger here of getting blinded by technology when the sharp end of the spear is understanding what choices consumers have today and how the phenomenal of the mobile phone, whether smartphone or just basic, how that can actually give people a better choice. Yes, so I was asked on a panel at the beginning of this year, so is 2013 going to be the year of mobile money? And I said no, because actually 2012 was. So in 2012, for banks, if you're doing mobile correctly, that was the year that you had more interactions from the mobile channel than you had via the internet channel. That was a crossover point that was reached last year, and it's only going one way from here on in. So in a true mass market sense, that was a crossover year that we won't see again. So this basic stuff, this new habit that's emerged of people managing their money on a daily basis. So the average, here's a quick stat, the average internet banking user around the world logs in 5, 6, 7 times a month. The average mobile banking user is doing that 25, 30 times a month. So it's become already the channel of highest engagement for customers handling their money in the developed world. And yeah, that is absolutely phenomenal. It's getting the bank onto the front screen of people's smartphone. And that daily habit, we all know that content follows traffic. So the opportunity then for banks to use that position that they've gained on the front screen of their smartphone to actually broaden their role in their customers' lives, to give them a bit of trust in this rather scary virtual world of the future, we believe is a really, really interesting theme.
So I would agree that it's already here, but it's in different places around the world. So, for example, and I will say that the mobile commerce piece is not here. So let me give myself a lot of little outs here, so you can come back to me, since this is being recorded video. Number one, if you look at what's happening with mobile commerce and mobile remittances in the Philippines, in Latin America, in Brazil, in Afghanistan, okay? I mean, Afghanistan is further ahead with mobile commerce and mobile payments because they had to be, because they didn't have the infrastructure or the safety issues to actually go into brick and mortar banks. I remember about 10 years ago, I said, kind of being a little bit cheeky, to my CEO of Europe when I was at Citi, we should stop building branches. We should not have another brick built for branches, because that is not the way people are going to be engaging in the future. And he kind of laughed at me. But I really believed it. And what I would say is that the emerging or the emerged world is leading this way because of the lack of infrastructure, because of the lack of security. And where I see all the launches happening over the next 12 months, it's all in Latin America, Asia Pacific, Middle East, Africa. The things that are happening with identity, the biometric, the identity cards that are being issued in Nigeria. I mean, the pilot is 13 million people going to, having full identity of all Nigerians, 60 million. The identity card that was released in South Africa this year, 2013. So because of the necessity, it's already happening in the emerging world. But I think the commercialization reality that it is a better experience for people in the UAE if they're sitting there and they need to send money home, and the UAE is 80% foreigners working in the UAE sending money home, it's better to do it and easier to do it from your mobile phone than it is to go to a branch or go to a location. So I think the next 12 to 18 months, I know our commercial pipeline. I assuming our competitors have the same commercial pipeline. In the developed world, I think it is about consumer experience. Until it's easier on your mobile phone than to just tap and go. I remember when tap and go launched and people are never going to do this, security concerns. Well, guess what? Convenience outweighed security in the developed world because we have the infrastructure where people actually say, you know what, if something happens, my bank is going to take care of me. So I'm just going to tap and go. And I think that is where you have to get consumer experience right in the developed world. In the developing world, necessity is driving innovation.